Yeah,
we take like one chapter every day for revision also, it won't sufficient,
yes.
sir.
Revision, I already told you, MCQs you should manage. Essay questions I'm going to explain. Got my point? So this, whatever it is, like I'm planning to finish by 10 days. After that, all essay questions I'm going to like teach you on the screen. That's what I can do. Fine. And MCQs, whatever are there, you manage on your end. MCQs you can study and write the test. Fine. Okay.
Okay, sir.
See, whatever I'm doing in front of you. I'm not like whatever time I'm devoting, it is there in front of you. No? Now, so we are starting with the consolidated profit or loss. Okay. Consolidated statement of profit or loss and OCI. This is the chapter we are doing right now. So hopefully, I think whatever chapter have been taught to you, you almost all you have done all the reading thing. Rajeshwari and Meghna, have you finished all the chapters till now? The reading
Yes,
Yes,
sir,
sir,
except
almost.
TPS.
except TPS, you have done
Yes.
everything, correct? Okay, that's satisfactory then. Now this is the question of consolidated statement of profit or loss. What are we going to do in this? The same thing, the procedure what we followed in previous chapter, the same kind of procedure of consolidation we are going to follow here. We are going to club whatever the elements you are seeing in the statement of profit or loss. We are going to club those things and we are going to show this as a one single company. So how it happens? So P company acquired 75% of ordinary shares of S company. On that company's incorporation
Sir, we can't
into,
see the screen, sir.
okay. Now can you see the screen, everybody?
Not yet, sir. Yes, sir.
Okay. P company acquired 75% of the ordinary shares of S company on that S company's incorporation in 2003. So P company has acquired 75% in S company. Okay. The summarized statement of profit or loss and movement in retained earnings of the two companies for year ending 31st December 2006 are set out below. So sales revenue, they have given cost of sales, they have given gross profit, they have given administrative expenses, all the elements of financial statement they have given. They have also given movement in the retained earnings. Retained earnings, they have given the balances. So these are like bought forward balance. Okay. This is the profit for the year and this is the closing balance after adding the profit to the opening balance. So this is opening balance, this is closing balance, this is the profit for the year. You are required to do the consolidation. Okay, this is a question without any adjustment yet of anything. So it's a plain and simple question. Let us do the consolidation right now. So what we'll do, we'll add up everything here. We'll add the revenue, we'll just add the cost of sales and deduct. We'll get a gross profit, a combined gross profit, then we'll deduct the administration expenses. We'll get a combined profit. Okay, let's see how it goes. So 75 plus 38 revenue, cost of sales, you added both of them, you are deducting. Gross profit, it is here. This is a combined gross profit. Administrative expenses, you added them up and you are deducting. You're getting PBT. You're just adding up both the taxes. 14 plus 8. It happens to be 22 and you're removing. Then you have, is that income tax? 10 plus 2. This is your income tax expense. This income tax you are removing, you are getting the profit for the year. Now, till here all the consolidation things as we used to do in the case of balance sheet, we are performing the same things here. Okay. After getting the profit, this profit has to be apportioned amongst the parent and the OCI. Sorry, NCI, the non-controlling interest. So whatever the profit the company has earned has to be apportioned amongst the parent and the non-controlling interest. Okay. Let's see what is the share of parent in this. The share of parent happens to be 75%. So 25% goes to NCI. What is the profit of subsidiary company in this year? 8,000. Out of this 8,000, 25% goes to whom? Just calculate.
2,000.
2,000. That 2,000 would go to NCI, and rest of the 6,000 would be apportioned amongst, would be given to the parent company. So here we have the NCI has got the 2,000. But what is this 27,000 then? So 6,000, see, out of the subsidiaries profits, which is 8,000, 6,000 has gone to parent, 2,000 has gone to NCI. Okay. This 6,000 is already there in this 29,000. Okay. So what we have done is, we have just divided this 29,000 into two parts. 2,000 has gone to NCI, and the 6,000 which the parent is supposed to get is just after deducting the NCI's share of profit. The 27,000 what we have, 6,000 is already included in this. Okay, fine. So 21,000 it seems plus this 6,000 gives us the parent's profit. So now till here, please go through this question.
Sir, owners, I didn't get that, sir.
Which one?
The owners of parent.
Where is that owners of parent?
Profit attributable to owners of parent.
So what didn't you understand in this?
27.
Yes. This 27,000.
Yes, sir.
Yeah. So already, what is the like parent company's profit here?
21,000.
So how much they are supposed to get out of this 8,000? How much they are supposed to get out of 8,000? Hello.
Yes, sir. Like how?
Your voice is not audible, please.
6,000.
No. Just a minute, Mr. Singh. Yeah, Meghna, what is that? How much they are supposed to get?
Parent company is supposed to get 75% of profit.
Yeah. So out of this 8,000, 75% is how much?
6,000.
So that 6,000 you add to 21,000, how much is the parent's profit now completely in the group? How much?
27.
Hello?
27, sir.
27. Then 2,000 goes to whom? NCI. That's it. So what we can do is, as we know, parent's profit is already given. These are two. When they make single set of statements, okay, when they make single set of statements, parent has already earned a profit of 21,000. This is parent company's single set of statement, subsidiary company's single set of statement. What is the profit of parent here? 21,000. So out of their investment in subsidiary company, they are supposed to get 75% of the profits. So 75% of this is how much? 6,000. So 21 plus 6 is 27. That is parents, and 2,000 gone to NCI. So what we are doing here, directly we are finding out NCI share. From this group profit, if we remove NCI share, the leftover profit of 27,000 is group's profit. Fine. That's it.
Yes, sir.
So everyone done? I'm moving forward. Yeah. So let's understand this in the retained earnings section, what is happening. Okay. Just can you wait for a second? There's a call. Just a second. Okay. Now we will see the adjustments what are going on here. See balance at 1st January 2006. This is the statement of changes in equity extract. So retained earnings brought forward 87,000 and then profit for the year is 21,000. Here in case, this is in case of parent company. This is in case of subsidiary company. Okay. Just a second, I'll just do some additions here. 17,000, 5%. Okay. 75%, 12,750. 99,750. Yeah. See, this is like the parent company's retained earnings. Okay. This is whose retained earnings? Tell me all of you, subsidiary company. So the subsidiary company. So from this 75%, who should get? The parent. Okay. Because in this whatever the investment the parent has done, whatever the profits till now the subsidiary has earned, in those profits 75% should go to the parent. Okay, fine, because parent is the investor. So 17,000, 75% is how much? All of you do that.
12,750.
Yeah, 87,000 plus 12,750. How much is that?
99,750.
Yeah, and what is this year's profit what they are supposed to get?
7,000.
This is the opening balance of retained earnings, na? And which whereby they also have got the share from the subsidiaries retained earnings. And this year, current year profit, what they are supposed to get, they will transfer to the retained earnings. So what is the profit? What is the retained earnings balance at the end of the year? 1,26,750. Okay. What is NCI supposed to get? What is NCI supposed to get? Out of 17,000, 75% is 12,750. Okay. So what is 25%?
250.
Tell me fast.
4,250.
4,250. So that 4,250, this year's profit, it is 6,250. And you know, when I add this to the total of equity, add this to total of equity, this is total balance. Okay. So please go through this calculation, wind up this one, we'll go for next question. Okay.
Done, sir.
Next question. So there is last point, something they are giving here. This is the closing balance of retained earnings of the parent. And this is the, again, let us see what they gave. 25,000, the closing balance of the subsidiary company's retained earnings. So what did we get here? We got 1,26,750. Now in this way also you can calculate This is the closing balance of the parent company's retained earnings, the closing balance of subsidiary company's retained earnings. Out of that, the parent should get how much? 75%. Is parent not entitled to get 75% from the subsidiary company's profits or retained earnings? They are entitled to get. They got it. So what is the closing balance of retained earnings? 1,26,750, which you calculated here also. This is also a correct treatment, because 99,750 you got by adding the subsidiary company's retained earnings, and this year profit share also you gave it to them, na? 6,000. That is 21,000 is their profit, and 6,000 also you gave them. So totally 27,000 you added. You got 1,26,250. You can do in this way, or you can do it in this one line adjustment. Closing balances you can take. You can directly apportion this 75% to the parent company, and they get their closing balance of retained earnings. Anything is all right. Shall we move forward?
Yes, sir.
Yes, sir.
Yeah. So this 17,000 and this is current year's profit, na, 8,000. Like 25,000 you directly apportion, or you apportion 70. See what they have done. They have taken 87,000. What they did? They apportioned the opening balance and added that to opening balance. Okay, and here you can see they apportioned it and they added to the opening balance. Current year profit is 27,000. They are directly transferred to the retained earnings account. They got the closing balance. Instead of taking opening balance separately, like instead of taking this 17,000, dividing it in 75 and 25% share, adding it to the opening balance, okay, and then like bringing the opening balance in the beginning of 99,750, and then adding current year's profit and bringing this closing balance. Same doing with the NCI. You can directly do this. You can take the closing balance and directly apportion this subsidiary companies, whatever is their profits, you can directly apportion. Okay, directly you can give parent their share. You can get the closing balance of parent in this way also. Let's go for next question. Now we are coming into the topic of intra-group trading. What do you mean by intra-group trading? This is the trading which is happening between the parent and the subsidiary, correct? So all of you just read this question. So what is happening here? Just a second. Yeah. What is happening in this case is, suppose in our example, in our earlier example, that S company had recorded sales of $5,000 to P company. During 2006, S company had purchased these goods from outside suppliers at a cost of 3,000. So what has happened? Subsidiary company bought goods of 3,000 from outsiders, sold it to parent at 5,000. Okay, sold it to, so they purchased. So subsidiary company purchased goods at the rate of $3,000. They sold this 3,000 worth of goods to parent at 5,000. So how much profit they made in this transaction?
2,000.
$2,000. Do you think this $2,000 is a realized profit or unrealized profit?
Unrealized profit.
It's unrealized profit because this has not been sold to third party. This is between the parent and the subsidiary, or this is inside the group. Inside the group, if transactions happen, those are called intra-group transactions, and in that case, whatever profit is made is an unrealized profit. Correct? Now, do you think why it's unrealized profit? It is nothing but it is happening between the same company. So there is no profit or loss in this case. If they sell it to third party, then they can realize the profit. Understood fact. And in the previous chapter also, while doing the the unrealized profit case, we already discussed in balance sheet what treatment should be given. We discussed that from inventory they should deduct, and from retained earnings also they should deduct. Correct? Why they should deduct the profit from inventory? Because it has not been sold to third party, it is in the company itself. Okay, and we have to show the inventory at cost. You remember this adjustment? Previous chapter we discussed. All of you, I'm asking, do you remember that adjustment in the previous chapter? Very strange. And you're saying you read everything till now? What is this unrealized profit intragroup trading concept? And I told you the next part of this will be explained to you in the next chapter. What we did the treatment, whatever the profits. Do you remember this question? Parent company buys goods at 1600 and sells them to subsidiary at 2000, and in this case they make a profit of 400. When they are maintaining separate set of books, they showed this profit. But do you think this profit is a realized profit? No. So what they have to do? Correction. That means what they have to do, the adjustment. They have to debit the group retained earnings. That means this 400 what they have credited, they have to remove it. And whatever the inventory. Now what is happening? The goods are in S company's inventory at the end of the year and appear in the S company statement of financial position at 2000. Do you think they can show the goods at higher price at selling price when both are same company?
No.
No. So what they need to do? They need to credit the inventory account. So they created that. So they removed the unrealized profit in both the cases. Already we have discussed. You said you have read everything till now, but no answer. Rushing with the syllabus is not a problem. I will do this in this. Please come to your you also just catch the pace now. Once I'm done with this, I'll start revision. That time I will see every day where you're lacking and all. Okay. So here we are again. So that was the treatment which was done in the statement of financial position. This is the statement of P&L we are preparing. Okay, we are preparing statement of profit or loss. So now, as the trading is happening between the parent and subsidiary, here who has sold the goods to whom? Subsidiary has sold the goods to parent, and they recorded that as their revenue. Who has got the goods or who has purchased the goods? The parent. They have recorded that as cost of sales. What you need to do? You need to remove this particular intra-group trading from their sales and cost of sales. All of you tell me, did you understand?
Yes, sir.
What did you understand?
Remove the excess amount from cost of sales.
That excess amount is a different case. Here the sales is happening between the subsidiaries. When they show themselves as one company, can they recognize the sales and
No.
purchase? Can they recognize the sales and purchase? They cannot recognize, no? Correct or wrong?
No, sir.
See, when
No,
it is
sir.
like, suppose it is a credit sale. It is a credit sale. That means 2000. Just a second. Suppose it is a credit sale. Parent has sold goods to subsidiary. parent has sold the goods to subsidiary, suppose 2000 worth of goods to subsidiary. And this sale is a credit sale. So parent is supposed to get how much from subsidiary? 2000. So they will show us subsidiary as their receivables or not? They will show subsidiary as their receivables or not?
Yes, sir.
Parent has sold goods to subsidiary of $2,000 on credit basis. So are subsidiary parents receivables or not?
Yes, sir.
And
Yes.
is like in the books of subsidiary, they are payables to whom? Parent, correct or wrong?
Correct. Yes, sir.
So what you did for parents, what you did for payables and receivables in the previous chapter, you cancelled them, correct? Why? Because
Yes, sir.
between parent and subsidiary, if any transaction happens, it is intercompany transaction, and that has to be cancelled. Why? Because it is happening in the when you show them as one company, you cannot show this transaction because nothing. When it is a group, it is nothing but from one pocket we are putting things in another pocket. So the transaction hasn't happened. Okay, almost all. In the same way, when there is a sale and purchase happening between parent and subsidiary, that we need to cancel, and that treatment we are doing here. Yeah. So as I told you, here in this particular question, subsidiary bought the goods for 3,000, sold to parent for 5,000. So subsidiary has shown a revenue of 5,000. Okay, for them it is a revenue, and for parent, whatever price they bought the goods, that is cost for them. So we need to cancel this transaction from parents and subsidiaries, revenue and cost of sales. Okay, so we will do that here. Previous question itself is getting is continued here. 75 plus 38. This is the group sales. Okay, from group sales, we will remove that revenue, which is between the parent and subsidiary. We are removing it. From the group cost of sales, we will remove the same transaction, which is cost of sales, to parent. Okay, for if it is revenue for subsidiary, when subsidiary was maintaining single set of books, it was cost of sales for parent when parent was maintaining single set of books. Now they are going for consolidation. We have to cancel this transaction. So cost of sales removed from total cost of sales. So what is this 1 star and 1 star here? Anyone? Any one of you can tell me? Rest of everything is all right in this question. Nothing to discuss about. Almost done. Anyone, can anyone tell me what is this 1 and this star mark here? Fast.
Yes, sir.
See. When you observe this question, the subsidiary has bought the goods at $3,000 and sold it to parent for $5,000. What is the profit subsidiary is making here? This $2,000 is a realized profit or unrealized profit?
Realized.
Unrealized.
Unrealized.
Come on, please, unrealized profit. What will they do with this unrealized profit? Of course, they need to remove it. Why? Because it is not a realized profit at all. Correct? But how much unrealized profit they should remove? So here you can see. We can see that as per the standard what treatment we shall give. Okay. We have also seen in the earlier chapter that any unrealized profits on intra-group trading should be excluded from the figure of group profits, correct? That we used to do in retained earnings in the previous chapter, correct? Because there we were not preparing the statement of profit or loss. Here we are clearly making the statement of profit or loss. So whatever the unrealized profit you have made in this transaction, that will be reflected in your gross profit. Please tell me yes or no, all of you. Come on, tell me.
Sir.
But now a question should come from you. Sir, when you cancelled this total transaction itself, the sales and the cost of sales, then from where this profit arise? See here, if you read, there is one statement. One half of the goods remained in the P company's inventory at 31st December 2006. What is the importance of this statement? The unrealized profit we got is 2000, of course, but we cannot remove this total unrealized profit because only half of the goods is sold. How much goods is sold?
Half of the goods is sold.
So half of the profit only we need to adjust here. We cannot adjust the full profit. All of you, please tell me. All of you, Priyanka, Meghna, Rajeshwari, Mr. Srinivas, all of you, have you got this?
Yes,
Yeah.
sir.
Yeah.
Yes, sir.
Yes. And Athira also got, I think. Yes. Now, so
One half of the
one half.
of the
Yes, one half of the goods is already remaining in the inventory, na. So for the you have done the sales. Sales is, see, sales between parent and subsidiary has happened. That transaction, whatever it is, we have settled. But here only half of the goods. See, half of the goods is remained in the P company's inventory. But that means half of the goods. What happened? It got
sold.
sold to.
So to pay third party.
Third party. Okay. So when half of the goods is remained in P company's inventory, who sold to whom in this case? Subsidiary company purchased the goods from outside suppliers. Okay. And they sold the goods to whom? Parent company. Now when the goods, now the goods should be with whom? Parent company. But parent company has how much goods? Half of the goods. That means half of the goods, what they have done? Tell me.
Sold to third party.
Sold to third party. So that half of the goods, whatever they have, that half of the goods would have that unrealized profit with them. That unrealized profit we need to remove. As you saw the previous chapter question which we discussed right now, we debited the group retained earning, we debited the retained earnings, we credited the asset. Here we will remove this unrealized profit from the assets, that is, I mean to say, from the closing inventory and also from the gross profit, correct? Please tell me yes or no.
Yes, sir.
Yes, now.
So, but how is it one, sir?
Come on, Meghna, this is 2000 into 1 by 2. It is 1000 now.
Oh, okay, sir.
Yeah.
Okay, sir.
So now, since here we are not preparing retained earnings, any account, we definitely know that the gross profit would be transferred to the P&L account. You did your T-shape accounting na, in your intermediate and degree. In that, gross profit again would be transferred to like P&L account, and the P&L account will be transferred to retained earnings. That retained earnings will have this profit na, this profit or not? Please tell me.
Yes, sir.
So what we did in the previous chapter, we removed that from the retained earnings. Here we will do that adjustment with the gross profit itself. Here itself, we will not drag it. So we will deduct the 1000, which is unrealized profit, and again we should adjust this with the inventory also. Did they give you closing inventory anywhere in the question? Please tell.
No, sir.
No. So what they gave is cost of sales. What is the formula for cost of sales? Opening inventory plus purchases minus closing inventory. Correct?
Yes, sir.
So this closing inventory is in terms of negative value. Am I right?
Yes,
Is it in negative value or not? Here. Is it in negative value? So all of you open your mouth and tell yes. What I'm asking to you, cost of sales formula is what? Opening inventory
Yes,
plus.
sir. Opening inventory plus purchases minus closing inventory.
So if you have unrealized profit of 1000, you have to subtract or add here. to just get the correction done?
Add it.
Add it. Why?
Minus of minus.
Because this is minus na here. This is
Minus of
minus.
minus.
So minus closing
Yes.
stock. Yeah. So minus. Like if we do, it is better if we add up directly. This minus plus would be adjusted. Okay. So here we are kind of. So already closing stock will be in minus. So we are adding it here. Okay. So it will adjust and you get this figure. Rest of the things all are same, no change, nothing. And here comes the 28,000, the profit for the year. And you already know from the, where is that? Yeah. Till here everything is all right. You already know na what is the profit of subsidiary company in this question? What is the profit of subsidiary company in this question?
8,000, sir.
8,000. From that we will remove the unrealized profit. Why? Because that is between the parent and subsidiary. No, we'll remove the unrealized profit. So we removed. So whatever is there, 7,000. Of that, 25% goes to NCI. Correct? So that 25% is how much? Calculate and tell. 1750. Please tell me. That is why things don't move fast. How much?
Yes, sir. 1750.
Yes, sir. 17.
So that 1750 directly deduct from 28,000 and leftover profit is the parents. Okay, finished. And then take the retained earnings opening balance and add this parents profit to it. You get the retained earnings closing balance of the parent. Okay, come on, finish this. I'll go for the next question fast. Once done, tell me. I will move forward. Okay, we'll move forward fast. Okay. See, this intra-group dividends already we have discussed in the previous chapter when we were doing. So all this is already done thing. Okay. Now you can you already have the videos you can watch. We have I that time itself I told you how to adjust in the P&L also. Pre-acquisition profits. Let us move forward and see what is happening here. See, you already know what is pre-acquisition profit. Parent has acquired subsidiary on 1st March, and this particular period is called as pre-acquisition. Any profits in this period is called pre-acquisition profits. Any profit after this period till December 31st would be called as post-acquisition profits. Okay. So now what is the point what they are raising is only the post-acquisition profits of subsidiary are brought into consolidated statement of profit or loss, and it is understood fact because pre-acquisition profit is irrelevant for us. Only the post-acquisition profit is relevant for the investors. Only the post-acquisition profit is relevant to the investors. Now, read this question. And like EPS question you tried, all of you are saying now. Please send me the copy in which you did in which you tried the question. I also want to see your hard work. After explaining that in such a detailed manner, if you are not able to do, then what will you do? P company acquired 60% of the 1 lakh equity of S company. So P company acquired $1 lakh worth of equity of subsidiary company. Okay, but they acquired how much? Only 60%. So 40% who has acquired, who it is whose share? NCI. They acquired on 1st April 2005. So as per this question, what is relevant? Pre-acquisition is relevant or post-acquisition profit is relevant? All of you. What is relevant as per this question? Pre-acquisition or post-acquisition? Post-acquisition.
Acquisition.
So post-acquisition profits are relevant in this question. Okay. So now you will see the change, what changes they are doing. The statements of profit or loss of the two companies for the year ended, parent company and subsidiary company, for the year ended 31st December 2005 are set out below. So of course, you can see parent companies and subsidiary companies statement of profit or loss given to you. But you see here, they have converted the subsidiary companies, all the figures to post-acquisition figures. They have done it here, correct? See, from if you take from April, and they are closing the books in the month of December. April, May, June, July, August, September, October, November, December are 9 months. Okay. So they are saying that only this particular period is relevant for you. Only this particular post acquisition period is relevant to you. That's it. That's the only relevant thing. Because the post acquisition period, whatever is happening, and the profit whatever the subsidiary is making post acquisition is what is apportioned amongst the parent and NCI. Okay. Now you can see here the post acquisition profits are 18,000. Some note they have given, it seems. Dividends paid on December 31st. These are the dividends they paid, it seems. Parent paid 12,000, subsidiary paid 6,000, and the profit retained is this much, and this much it seems. So what is happening? S company's profit are 24,000. Out of that, they paid a dividend of 6,000, and this is the profit they have retained. Parent company's profit for the year is 42,600. They paid a dividend of 12,000 to their investors, and this is the retained profit what they have. Now, next point. Retained earnings previous year balance is what? 81,000, and this is for the subsidiary. And when I add this year's retained profit to this balance, I get the retained earnings closing balance. All of you understood the question? All of you understood the question till here?
Yes, sir.
Yeah. Okay. Just give a reading to this. I will wind up this in fraction of time. Let's go through everything. We'll do this question. Yeah. Now they're asking you prepare consolidated statement of profit or loss and the retained earnings and NCI extracts from the statement of changes in equity. First, we will focus on consolidated statement of profit or loss. What is relevant in this question to you? Please tell me what is relevant. Pre-acquisition or post-acquisition?
Post-acquisition.
Post-acquisition. So the shares in S company were acquired 3 months, acquired 3 months on the year. That means they acquired it on 1st April. So that previous to this period was pre-acquisition, and after this period is post-acquisition. So only the post-acquisition proportion of the S company statement of profit or loss is included in the consolidated statement of profit or loss. Now that is what we are doing it here, and for your convenience, they also did the calculation here, and they have already calculated the amounts, the post-acquisition amounts. Now what you need to do, take this and take this, and this, and you do the consolidation now. So that is what is happening here. 170 plus 60, 230, 65 plus 27, 92. Just can compare 65 plus 20, yeah. And then you get the gross profit. Okay. Then administrative expenses 43 plus 9. Then this one, income tax. So you get profit for the year, and then income tax you remove, you get profit for the year. This is a very, very proper treatment what they are doing. And here you need not again get any kind of issues, because they only took the post acquisition figures. And now this particular 57,000 you have here, just calculate from the subsidiary company's post acquisition profits how much the NCI should get. So just calculate it. Come on, 40% and 60%. Tell me what is the figure. What is the answer?
10,800.
Yeah.
$7,200, 10,800.
7,200.
Did it here. Yeah, did it here. Now this is what the parent should get. This is what the NCI should get. Okay. Now. Okay, profit for the year. So 1,000. Just a second, 2 minutes. So we get the profit for the year 42,600. So this 18,000. So post acquisition profit has been given, and the first one is given. So 57,000. So this 57,000, now we will give the NCI share, we will take it here. 57,000 minus this NCI share is left over the parents, the group share, 49,800. Now, let us take everything here. See, what is the retained earnings of the parent? Opening balance, all of you, 81,000. And this is NCIs. So we took the opening balance. Dividends paid. What is the dividend? How much dividends they paid here? 12,000. We'll adjust that dividends. So here 81,000 opening balance, dividends paid 12,000. Okay, and the total comprehensive income for the year, what is that? 49,800. That is what they are getting, the parent share in the investment. Okay. So how much is the closing balance? 18,800. Let's take the NCI thing. Do you think NCI has the opening balance given to you in the question? No. This is subsidiaries balance. Okay. NCI's balance is not given to us. We don't know the opening balance. That is what is left over. Now, see, the subsidiary has given dividends to their investors. Now, how much? 6,000. Out of this 6,000, 60% goes to whom? Parent. And 40% goes to whom? NCI. So 6,000 40% is how much? 2,400. 2,400 dividends have been given to the NCI. Now, the profit what they got is 7,200. Added on acquisition of subsidiary. So what we have done here. See, as you know, this particular company, this subsidiary company, has been acquired by the parent on 1st April. Before that, pre-acquisition period was there. Okay, and the subsidiary company's retained earnings is there since the beginning. Okay, you can see here opening balance and closing balance is given to you. Please tell me yes or no, are you following? What is the retained earnings balance given to you here?
81,000.
What is the opening balance of retained earnings? 40,000, correct? 40,000. Yeah. This is the 40,000 is the retained earnings balance. Okay. This particular retained earnings, NCI has their share on this or not? NCI is entitled to get their share from the retained earnings or not? Pre-acquisition retained earnings. Yes. This company, subsidiary company, is fully acquired subsidiary or partly acquired subsidiary?
Fully acquired.
What fully acquired? 60% parent has acquired. It's a partly acquired subsidiary, na? Please read the question. P company acquired 60% of the $1 lakh equity shares of subsidiary company. So this is a partly acquired subsidiary. So we will take the share capital also. Share capital is taken. Retained earnings is taken. Okay. And also the pre-acquisition profits. So what is the profit of the company, subsidiary company? The total profit of the company is 24,000. In actuality, the total profit of the company is 24,000. Post-acquisition profit is 18,000. So pre-acquisition profit would be 6,000. That 6,000 also we are taking here. This is the pre-acquisition profits. The total amount of the share capital, pre-acquisition retained earnings, and the pre-acquisition profits is amounting to 1,46,000. Of this, 60% goes to NCI, 40% goes to NCI, being an investor. So that 40% amount is 58,400. Just add it here, calculate this entire things, you get the NCI balance at the end of the year. Finished. Just have a look through this question since the beginning. Any doubts, you can ask me there and then. Once again, read the question. It's a very important and good question. Parent company acquired 60% of the total equity. So 40% here itself goes to whom? NCI. So 40,000 is their share. One thing here I explained you right now. And this is a question of, this is a question whereby the parent has acquired subsidiary on 1st April. So before 1st April period is pre-acquisition. After 1st April period is post-acquisition. Post-acquisition is what is relevant to us. So here is what we have calculated the amounts of post-acquisition period of subsidiary company given in the question.
Yes, sir.
You can have a look through. Now again, some things they have given here, that the dividends were paid by the parent company in the previous year. Okay, previous year ending, they paid some dividends. Here subsidiary company also paid some dividends. In this dividend also 60/40 goes to parent and subsidiary. You should parent and NCI, parent and NCI, that also you should keep in mind. And this is the profit. This is the retained profit of which year? This year or previous year? Come on, tell me. This is the retained. This is the retained profit of this current year. So this current year profit should be. Just a second. Just a second. No. Just 2 minutes. Please wait. Please wait. Please wait. Sorry, dividends are paid this year actually. Sorry, dividends are all right. After making the dividend payment, the retained earnings balance would be there, na? This is the 18,000 which is there in the retained earning. That will be apportioned amongst the parent and NCI. So 60-40% we did it here also. So all the consolidation things done, and we took the post acquisition profit, which is 18,000. Okay, this post acquisition profit of 18,000 we took, and we did 60-40 for this. We got the NCI share deducted from the total profit of the year, total profit, post acquisition profit of the year, and then we got the parent share. Okay, so this is what we did. Again, we
profit retained, did we deduct? What did we deduct, sir?
Which one?
Telling something we.
This one, 18,000.
Yes, 18,000 is bifurcated, no, sir.
18, yes, actually they paid a dividend of 6,000, na? They paid to investors. So that dividend what they paid, do you think this 24,000 should be apportioned totally, or this 18,000 only we should apportion post acquisition?
18,000.
So that 18,000 is what we are bifurcating here.
Yes.
Okay. That 18,000 we bifurcated, and the parent, this is actually how much the parent should get. 10,200, 10,800. The 10,800 is also there in this 49,800. Okay, so 49,800 minus 10,800 is 39,000. So 39,000, and they got 10,800. $42,600 minus 42,600, 3,600. So this 3,600, again 6,000 into 60%. 3,600 they will get from here. 2,400 will go. See, if I explain you in that way, it will be very complicated. I will tell you what is that this they are showing. This 57,
Yes, sir.
this 57,000 is there. From that we removed what? NCI share, and they got directly the owners of, that is the parent company share, correct? In actually, how much they are entitled to get? 10,800 from the post acquisition profits, correct? So that 10,800 is included in this 49,800. If you remove that, you have 39,000. So this particular subsidiary company has given dividends to the shareholders, na? Tell me. Come on.
A little bit confusing.
They gave, na? So from this 6,000 dividends, how much parent has got? How much parent has got? 6,000 is the dividend given by the subsidiary to their investors. So in this, 60% has gone to whom? Parent. 40% has gone to whom? NCI.
Yes,
So
sir.
NCI got 2,400. Parent got how much? 3,600. Correct. That is reflecting here, na? 3,600. So I will tell you the breakup. 49,800 minus 10,800. 10, actually from the profit they should get now this 10,800. Correct? So how much it is? 39,000. But they should get the dividend share also, no? This people, parent. How much is the dividend share they should get from 6,000? I am speaking about post acquisition. Dividend has also been declared. So 60%.
2,400.
No, say 3,600. 60%. So 39,000 plus 3,600 is how much? No, sorry. This is what? 39,000, no? Yeah. 39,000 plus 3,600 is how much? How much?
3,54,000.
No,
35,400.
just wait. 57,000.
4,26,000.
Oh, no, you're going in lakhs, that is in thousands.
Yeah,
Just
42,600, sir.
just a minute, please wait. 18,000. Okay. So, yeah, how much is that? 42,600, correct? Can you say this 42,600 here? This is the parent's profit, now. Yes.
Yes, sir.
So 42,600. 49,800 should match. So 24,000. So post acquisition profits given to them. Out of 18,000, they should get 10,800. 7,200 should go to the NCI. So but they are what they are showing is 49,800. Still we are getting 7,200 difference. From where they bought this difference? Just wait, 2 minutes. Let me tally that amount. So they got dividend also here, and taking that all dividend into consideration, 42,600 is what is their profit. Okay, let me just do one thing. So 18,000. This is your post acquisition profits, declared dividends. So this dividends maybe they paid, and this is the retained profits. Seriously, we are getting one difference here of 7,200. So we took all the post acquisition figures now. The profit for the year is 57,000. So parent got their parent 57,000. Just 2 minutes, you wait. 57,000. Actually 34,200. 34,200. Okay. This is the group profits. From that we remove NCI, we get the parent's profit. That's understood fact. But this 49,000 breakup I'm seeing, I'm not getting this breakup. So this is parent company. They got this is the dividend they received. That also they included gross profit, other income minus administrative expenses. They got PBT, taxes. They got PAT. So this is their profit. So when they have their own profit, being an investor, they should get their share from the profit of the subsidiary company. So they getting their share of profit of subsidiary companies how much? 18,000 ka 60%, 10,800. So just a second. So 42,600 plus 10,800 minus 3,600. Got it. Minus 3,600. If we do, then we got 49,800. See, I will show you what that is. Actually, if you have to remember this way, it is the easiest way. But how they got this 49,800 thing is, understand. See, this is the profit of the parent, na? All of you, please tell me yes. What is the profit of the parent here?
$6,000.
What is the profit of the parent? Come on, what is the profit of the parent?
42,600.
So 42,600 we took. Already these guys got their share of dividend also in this. They included. So 42,600 is their share. And this is the post-acquisition profits, correct?
Yes.
Out of that 10,800 also they got. So how much is that? 53,400, correct? Yes?
3,400.
Do you think they will get, when they are getting the share of profits, do you think they should get the dividends also?
Yes, sir.
When they are group company, they should get, or they should remove it?
When they're group, they should deduct.
So in consolidation, what we'll do? So what you'll get? 53,400 minus 3,600 is what?
49,800.
49,800. Okay? Understood, all of you? Hello? Hello?
Yes,
Yes,
sir.
See, instead of all this complication, simply you do one thing. Take this 49,800. I will tell you the bifurcation. 49,800. What is the profit the parent has got? 42,600, correct? 42,600. You remove, when you are making them as a single company, that means a group company. Do you think dividends what they receive would be applicable, or that should be cancelled out? Tell me, come on. I'm asking you the dividend what they got when parent company is a single company, they showed it. When they are consolidated, is this dividend to be shown?
No, sir.
No, in group company can you show it? It is intercompany, na? Remove it. So what I did here, I removed that. What am I doing? When I'm showing it as a group, this is group profit, na? Owners of the parent. This is the group profit. 57,000 is group profit. Out of that, the parent profit is this. So what dividends they got? They will remove it when they are consolidating. Why? Because the profit share also they are taking. They will take profit and dividends both. Do you think? See, all the intercompany transactions should be removed, na? So dividend has to be removed. You know this? Previous chapter also we discussed. So I removed. How much is the balance? Tell me. What is the balance here?
39,000.
And what is the profit share they should get out of this 18,000? 60%. How much is that? Finished? Okay.
Yes, sir.
Everyone, you are following? Now we'll go for the next question. Can you do this question, this consolidation question, Lamb-Lash and Broderick? The easy question, simple question. Do the consolidation for this. Almost all we will finish and we'll go for OCI section. Come on. I will not give you much time, but try to do this question. Come on. Mr. Srinivas, are you following?
Yes, sir. Yes, sir.
Yeah. Do this question. Come on. You are able to see or not? I don't know, but try. Okay, we will try this question. Not a problem. The following information relates to Broderick Company and its subsidiary Lamb-Lash for the year to 30 April 2007. So sales revenue have been given for both the companies. And what are you seeing here? This is 30th April 2007. Okay. They have given the separate statements when separate set of books were maintained, and they also gave some note like dividend paid and profits retained. Okay. I think dividends paid is what they have given here. So this is what was the profit and the dividends paid and the profit retained earnings. Okay. And retained earnings balance, previous year opening balance, and we have the closing balance. So this is what is the question. Same like the previous question only. In that also they gave all these details to you, like dividends paid and profit retained. All these things they gave you in the previous question also. Okay. And you also like have apportioned everything. So almost all similar kind of question. Additional information. The issued share capital of the group was as follows. These are the share capital. Broderick Company's shares are like 5 million ordinary shares of $1 each. Lamb-Lash 1 million ordinary shares of $1 each. Broderick Company purchased 80% of the issued share capital of Lamb-Lash. So who is like the majority shareholder here? Broderick, the parent. So parent has 80%. So this is a partly acquired subsidiary company, not a fully acquired subsidiary. So partly acquired subsidiary in the sense 80% is with Broderick and the 20% is with NCI. So Broderick Company purchased 80% of the issued share capital of Lamb-Lash on 1st November 2006. So this is the end of the year it seems, and they purchased, they issued, like Broderick Company purchased 80% of the Lamb-Lash company shares on 1st November. At that time, the retained earnings of Lamb-Lash, that is the pre-acquisition retained earnings, is 52,000. Okay. Retained earnings brought forward and retained earnings carried forward. So this is the opening balance. So dividends are also paid now. So some dividends they paid, it seems. Okay. So on the date of acquisition, the retained earnings is 52,000. Okay. This is what is the information given. You need to do the consolidation. And what they are saying, you prepare the consolidated statement of profit or loss for the year and extract from the statement of changes in equity, showing the group retained earnings and NCI. Okay, we will do that also. Let's go for the consolidation. This is the year-end balances. Acquisition has been done in which month? November.
November.
So from November till April, how many months? November, December, Jan, Feb, March, April.
6 months.
6 months. So what you need to do is you need to convert all these figures of the subsidiary to 6 months. Okay. That is the first thing you need to do. Simultaneously, we'll do it. Sales revenue will take this. We'll take this sales revenue of Lamb-Lash for 6 months. That is what they have done. So this is what they got. They did the same thing with cost of sales. And same thing, we'll take it here and do 6/12. We got cost of sales, gross profit. We'll do the same kind of treatment with administrative expenses. So we'll take this and this will take 6 monthly. This is the like income from investment for the parent because they invested in Lamb-Lash now, and Lamb-Lash has declared dividends in the previous year, it seems. That is what they have given. Dividends paid is 30, correct? So out of 30, what we say, 80%. How much is 80% of 30? How much is 40%?
80% of 30 is 24.
Yeah. 20%?
And 6.
20%. 6.
6, sir.
So that 80% has gone to the parent now. So that is what they are showing here in the question. Because the dividends what the subsidiary has given is of $30. Okay. So that's okay. 6 is NCI share. So when we'll do the consolidation, do you think we are going to take dividends? Do you think we're going to? We are not going to take, correct?
No. Okay.
This is separate set of books now.
Yes, sir.
Already I gave you how to do in the previous question, how to find out the parent share. We'll do that here also, don't worry. So the profit before tax is this, Lamb-Lash profit. So PBT we got, okay. So profit before tax, profit for the year, 389. So what is this? 1350 and less 780, you get 570, less 180, you get PBT 390. Now let us do the income tax expense deduction. So this is 65 and this you need to take how much? How much?
10.
6/12 for half year. So 10 into 6/12, you got the income tax expense. Remove it, you get the profit for the year. Till here, all of you do the calculation. We'll again next we'll move forward. Finished? All of you tell me if you are done with. Just give me a second. You please calculate and come. Done? Hello? Have you people finished this? Hello?
Yes, sir.
Yes,
Yeah.
sir.
You are done with this? Yeah? Yeah. Rajeshwari, are you doing this question? Did you finish till here?
Yes, sir.
Okay. So we are done with here, done with this till here. Now you very simply know when you take the subsidiaries profit, okay? So what is the profit for the year?
And now complete.
You did the profit for the year 40, correct?
Yes, sir.
Out of this 40, we will take the post-acquisition profits only. Where is that? This is the group profit. And this is the what we have taken. Just a minute. We will see the NCI thing. into 20%, no? 20%. 4. So how did you get this 4? Any one of you? See, the profit which is given here is the total year profit, no? This is the year-end profit. In the previous question, the bifurcation was done already. So you had a figure here of 18,000, and you immediately bifurcate. You immediately gave the share of parent and NCI to them, correct? But in this, the profit is given for the year end. Where is that? Yeah, in this is the 30th April 2007 statement. So this profit is a total year profit. So 40 into 6 by 12. How much?
20.
20. 20 into 20%. You should get NCI. What is that? 4.
Yes, sir.
So here we have done. So in this like 40, and this is the post acquisition profit 6 months, 20% NCI, correct? So this we have done. Very simply, if we remove this 4 from this 320, we get the parent share. Okay. Now we have distributed the profits also. Almost all the entire question is about to end. Just wait for a second. Just wait for a second. Dividend is 24, 300. So how much is showing here? 316. Okay. How you got this 316? Any one of you, can you tell me this figure? See, you already, I have explained you, na? 40 is the total year profit. We did 6 by 12 to get the post acquisition profit. We did 20% of that. We got NCI is $4. I am asking you this 316. Of course, you easily know to do this. Out of 320, the group profits, if we give,
Profit
if
of
we
the
remove
tax minus
the,
NCI.
if we remove the NCI share, we get the group share of profit. But I'm asking you, like parent share of profit, sorry, because we are this is a group profit. This group profit is divided into parent and NCI. So now I'm asked, not group profit, yeah, group profit, yes, because because this is now the total company, because parent and subsidiary have become one. From that, if you remove NCI share, this is the parent share, correct? Now you tell me this 316 from where you got. Here it is all right. You are getting 316. Can you tell me the breakup of this $316 amount? Simple, na? Go to the statement. What is the profit for the year? 324. Remove the dividend, because in consolidation that should not be there. 300. And out of that 40 into 6 by 12, you got how much? 20 into 80%. How much?
16.
360. Finish. Okay. So this is almost all done. Let us go forward. Once have a look through this, I will move forward. Okay. Once if we do these 2 points, your consolidated statement of profit or loss is almost done. Then only OCI will come into picture. Okay. And some 1 or 2 questions. That's it. This is not a big chapter. Let's take the balances here. We have to do the statement of changes in equity, na? Opening balance, retained earnings, opening balance, retained earnings. Closing balance, but some profits have to be transferred. So opening balance we have taken off retained earnings. Let us first do the parents thing. Now, this is the current year profits you are getting, correct? 316. That also taken. Now, dividends, the parent is also paying to their investors, na? Some dividends. How much dividends they are paying? 200.
200.
Yeah, remove it. This is the closing balance. Okay, done. Now, let us do the NCI's case. We will again go, we will do the same kind of calculation. Share capital, how much total is? 1 million in the subsidiary. Correct? All of you. NCI is supposed to get what? Share from the share capital and retained earnings. What is the retained earnings? And if I am not wrong, you should take only the what? Pre-acquisition retained earnings. Correct? I'm not getting anyone who is saying yes or no. We are finding the closing balance. For opening balance, I'm doing all this. So for
Yes,
opening
sir.
balance, I should take the pre-acquisition retained earnings. I took it. This total amount I'll take 20%. This is NCI's opening balance. Took it here, and dividends is what? As per the question, dividends are paid, it seems. $24. See, this guys, this Lamlash has paid $30 ka dividends, na? Out of this, like 80% has gone to Brodick, that is 24, and 6 has gone to. Come on. Gone to whom? Has gone to whom? NCI. So this is the retained earnings. We remove the dividends. Okay, to get their closing balance. And they got their share of profits of this year. So this is their balance at the end of the year. Finish this, then we'll go forward.
So 210.
Yeah. We calculated here, no? 20% of this. Come on, 1052 ka 20% is how much? Don't take that
Yes.
approximate things.
Okay, sir.
That is 210.4, na?
Yes, sir. 210.4.
You got it. And whatever the NCI will get the dividends, that will be added to the cash account, and in retained earnings, already they have shown in, if they are like making the statement, then their own statements. So in investment income credited to cash account, deducted from this, because they got in cash account, na, that one. So dividend treatment is done. Okay. So shall I move forward now? Please tell me. This is done now. Consolidation. Now, comprehensive income. Every one of you know what is a OCI. What is OCI, Rajeshwari? Rajeshwari, what is, yeah, tell me.
Which are not recorded in the P&L account, we transfer them to the OCI.
Why they are not recorded in the P&L account, and why we transfer them to OCI?
Unrealized.
Capital expenses.
Don't tell that capital
Unrealized.
expenses. This is non-realizable nature income.
That gain and loss on.
This has a positive account, negative account, correct. But basically,
Yes.
whatever is of non-realizable nature will go in OCI, correct? Now,
Yes, sir.
yeah, there is an example of this. And the same thing they are taking here. The consolidated statement of profit or loss of Broderick Group is as in the answer to the last question. In addition, Lamlash made a 2 lakh revaluation gain. This will go in OCI now? Yes. Same question they have taken, but they have taken the this thing also now. 2 lakhs. So this 2 lakh, what we have to do? 80 and 20. How much? 160 and 40. Correct? Yes. All of you listen this, read this, and what I've done this, understand.
Yes, sir.
Okay, sir.
So 316 plus this 200 ka 80% and 4 and this 200 ka 20% has gone into this. This is your total OCI. Done. Have a look through. I'll move forward. The rest of the things are same. No need to worry about. Okay. Let's move forward. So this is OCI example. So Broderick Group consolidated statement of profit or loss in OCI. So they took the profit for the year and OCI, the gain on revaluation, and they directly they bifurcated this and this and this. They got this. See, now I think you almost all got everything in this, correct? How to do this? If I'm not wrong. I'm asking to all of you, I'm about to wind up this chapter. Today I will completely finish this at any cost.
Yes, sir.
So let us take a 10-15 minutes break and again begin the session. Huh? Okay?
Yes, sir.
Okay, sir.
Yeah.
Okay, sir.
Yeah.